All right, so we are getting some awful economic numbers, plus almost 17 million people filed for unemployment over the past 3 weeks. Do you think we're headed for not just a recession, but a depression as well?
Well, I certainly think that we're already in a recession, and it will depend very much on the depth and duration of the shutdown. It's very difficult to perform an economic model when you're sitting here waiting for the government to announce that the economy can reopen. But certainly, right now, we do know that we're going to be in a very painful recession. Whether or not it gets to a depression, I think we can avoid that if the economy is able to reopen sometime in May. However, if we do push that timeline out to June, July, or later, as we've heard from some officials, I think a depressionary scenario is a realistic and very dire scenario that we may be facing.
How much of this horrific economic data do you think is already priced in, or do you think that there are stats, there's more data that could spark more panic selling?
I think right now the market seems to be relatively optimistic about a short-term downturn, meaning that the second quarter is expected to be the hardest hit, somewhere between a 15 to 20% drop in GDP, but a sizable V-shaped rebound with positive growth returning by the end of 2020. I do think that's a bit optimistic. Some of the early indications of the data are trending to the downside more than expected. And as we talked about, 17 million Americans already filing for unemployment insurance, a very dismal retail sales number, much weaker than expected, manufacturing numbers plummeting beyond expectations. This is really providing a pretty strong counter argument to the idea that we will see a V shaped recovery. Remember, even after the economy reopens, it's going to take time for businesses to come back online, reconnect with workers, reconnect with supply chains. And on the demand side, it's going to take time for consumers to be comfortable moving back out into the marketplace in crowds once again. So they're going to be hesitant based on lingering fears as well as financial devastation. So it's very likely that we see more of a prolonged U-shaped recovery, not getting back to positive territory until 2021, something I don't think is priced into the market as of yet.
So we've been seeing as this crisis has continued, the Federal Reserve has really fired its bazooka on all fronts. Have you been surprised by the extent of its actions, and what are the risks of such aggressive actions that the Fed has taken so far?
Well, I think it's clear that we've seen the Fed deploy a number of policies beyond what we saw taken during the 07-08 financial crisis. We've seen the Fed now take interest rates down to zero, an unlimited commitment to asset purchases, and I think we're up to 9 liquidity and lending programs. So this is an unprecedented number of policy initiatives taken by the Federal Reserve. The consequences, of course, we don't know. We do know that there's going to be a tremendous amount of debt. We do know that there's a tremendous amount of wealth destruction. We do know there's a tremendous amount of businesses that will not reopen as a result of both policies and the implications from the forced shutdown on the on the side of the federal government. So we really don't know. This is unprecedented territory. Some Fed officials are optimistic that the policies put in place will provide more of a bridge, allowing for that quick rebound. Others say, no, we're depleting savings and valuable resources that will actually diminish our potential for a higher level of prosperity going forward. So we could actually see lingering detriment to the economy for years to come. Again, it's really unknown at this point, a lot of it stemming from whether or not we can get this virus under control and when and if we can get the economy reopened.
So we've been watching the banks report first quarter earnings, setting aside huge reserves. What are you watching as earnings season unfolds?
I think right now, a lot of we have to look beyond the earnings. That's not really going to give us a longer term indication of where banks are headed, financials are headed, where the economy is headed. Right now, I think we need to be listening more to the ancillary reports of whether or not these programs are reaching small businesses and individuals, whether or not the funds are actually flowing. We were very optimistic when we saw some of these programs initiated from the Federal Reserve as well as the federal government, but specifically looking at the PPP PPP and the loans coming out of the SBA, there's a lot of reports saying that the intention was benevolent, but the flow of funds is just not reaching the intended recipients. So we really need to be watching whether or not these businesses are having access to the funds and whether or not these initiatives are having the intended consequences of keeping small businesses afloat. We've already heard from the U.S. Chamber of Commerce, 25% of small businesses have already closed their doors permanently, and only 40% expect to remain open through the end of the year. So these are dire numbers. We're talking about millions of businesses and by extension, millions upon millions of American workers that are being affected. So I really think the implications of the program and the effectiveness of these programs is much more important than a short-term snapshot of bank earnings.